General Motors shares, you can see, down over 3% this morning after news the company is set to take a multi-billion-dollar charge tied to scrapping many of its plans around the production of EVs. Phil LeBeau has a lot more on this story, of course. Phil.
David, this charge, which was announced in a 8K the company dropped after the bell yesterday, it is a pre-tax impairment charge on the company's EV assets and investments. And we know that there's been one in the third quarter. There will be more in 2026. Here's what it comes out to. $6 billion will be written off by General Motors. That will impact the net income, but EBITDA is not going to be impacted by this. Q3, they wrote off $1.6 billion. And again, the company has announced it expects more of these. They said it again yesterday. More of these charges are expected in 2026. For General Motors, its fourth quarter EV sales were down 43%. Had a big surge at the end of the EV incentives, which ended in September. Q3 numbers were big. Now we're seeing the slowdown in EV demand in this country, down 43% in the fourth quarter for General Motors. Overall, EVs made up just about 7.8% of total sales in the United States last year. Hybrids coming in at just over 14%. And there you see internal combustion engine vehicles now down under 80% of the vehicles sold last year in this country at 77.8%. As you take a look at shares of General Motors, keep in mind that this company will be reporting its Q4 financials on January 27th. No doubt, guys, they'll talk more extensively about the adjustments they've already announced when it comes to EV production and what they expect for 2026 in terms of both EV production as well as the market overall. Remember, they were down. EV sales, I should say, were up just 7% for the whole country in 2025. We'll see what happens as we see the end of those EV incentives. We'll see where it comes in for 2026.
Yeah, and obviously a lot of that, I think 7.8%, is made up of Tesla. Bigger picture here for me, Phil, it was only a few weeks ago, Ford announced, $19.5 billion in charges for its EV plans. So what are we going to be getting when it comes to EVs from Ford and GM in 2026 and 27? What are they actually going to be producing?
Well, it's going to be dramatically lower than what we've seen in the past couple of years. But they've both been very clear about this, David. They still plan to sell electric vehicles. Ford is pivoting away. Let's give an example here. The F-150 Lightning, that's going away. The pure electric one. What they do plan to build in the future will be an extended range electric vehicle, which, as you know, it has essentially a generator on board. You fuel that then provides power to the electric motors. So you get greater range there, but it's not pure electric. And for General Motors, it will still sell pure electric vehicles, but it's already made a decision on its Orion plant in Michigan to pivot away from EV production at that plant to internal combustion engine production. So essentially shifting more towards either internal combustion engine vehicle production or hybrid production.
Got it. All right. Thank you, Phil.